The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or APR. They tell us the number you need to put in your mortgage calculator if you want to get the monthly payment, principal, and interest. If you don't have a mortgage calculator, ronismylender.com, ronismylender.com. What did rates do yesterday? Latest data we have. It's all based on yesterday's average locking. Conventional 30-year fixed down 6.19. Jumbo 30-year fixed up 6.756. That looks almost the same as yesterday. FHA 30-year fixed up 5.991. VA 30-year fixed down 5.638. USDA was did I miss something here? Okay, wait a second. Let's go and let me look right over here. Here we go. 30-year. Oh, they're all down. 30-year conforming, 6.163. That was down yesterday. 30-year jumbo, 6.551. That was down. 30-year FHA, 3.962. That was down. 30-year VA, 5.51. That was down nicely yesterday. 30-year USDA, 5.986. That was down as well. Those are all down yesterday. Love to see all the down arrows. So we'll watch all of those for you. Let's take a look and see what the markets are doing today. Well, now we've got the S&P 500 down 30.06. And I lost my screen here on the 10-year Treasury. Let's see if I can get that back here for you. You got to love, don't you love modern technology? I love modern technology. Okay, so the 10-year Treasury is up 2 basis points. That's a yield. The 30-year mortgage bond price down, which means rate is up. But the bond's only down 4 basis points, so it doesn't mean a whole heck of a lot. So what's driving all of this data? That's what we're going to look at now. Well, it's stubborn shelter CPI costs. So if you look at the CPI numbers, that's the biggie. Stocks lower, mortgage bonds flat after the release of the Consumer Price Index report for August. 10-year is continuing to move lower, down. It was down, it's up. It's right, moving pretty minimally. Speaking of the 10-year, there's going to be a 10-year Treasury note auction later today, which can impact the bond market. Last month, we saw a weak 10-year auction back when yields were at 3.95%, over 30 basis points higher. Clearly, investors were incorrect by not purchasing as many as they could before rates fell. Remember, the bond price and the yield go in opposite directions. We'll see if they learned their lesson and if there is strong demand at today's auction, which would help yields to fall. Consumer Price Index report showed that overall inflation rose 0.2% for the month, in line with estimates. Year-over-year inflation decreased from 2.9 to 2.5, which was softer than the 2.6 expected. Topping the headline was a 0.8% decline in energy prices, 0.6% decline in gasoline prices. Just heard the stat yesterday. California, 28% of our gas price is taxes and fees. 28%. Now, think about that number. At 28% is taxes and fees. And if you look at it yesterday, according to AAA, our gasoline price here in California was $4.75. 28% of $4.75 means we would be probably somewhere around $3.50 a gallon. Oh, the national average is $3.25. Think about that one. Okay. So gas prices came down, but not for us in California. If you analyze the last 3 months of headline readings, the year-over-year inflation rate would be 1.14. if you annualize the last 3 months of core readings, the year-over-year reading would be 2.04. Clearly shows that the trend is favorable and the core rate is on track for what the Fed wants to see. Inflation data was good today despite shelter costs, which makes up 45.7% of the core index. Shelter rose 0.5% last month and 5.2% year over year, which is an increase from 5.1% in the previous report. The monthly reading was disappointing, showing that shelter is yet to catch up and reflect the real world. Shelter alone made up roughly 82% of the monthly inflation rise in August. 82% of the inflation came from shelter alone. Motor vehicle insurance has been the other culprit that has been contributing to inflation. It rose 0.6% last month, which is a moderation from what we've been seeing, but still high. Year over year, motor vehicle insurance decreased from 18.6 to 16.5, but that is down from over 23% months ago. Today's monthly reading annualized is 7.2%, so more similar readings would help this component continue to moderate. When combining shelter and motor vehicle insurance, this is big. It made up 89% of the inflation we saw in August. All of the other items only rose 0.03%. On a year-over-year basis, all the other items are only up 0.2%, which means that most of the inflation has been tamed besides lagging shelter and motor vehicle insurance. Bottom line, today's report did not change anything in regards to the Fed. The Fed is likely going to cut rates 1/4 of a basis point next week on September 18th. There's a 15% chance of a 50 basis point cut based on what the market feels, but it's most likely 25. What's more important is that there is the beginning of a rate cutting cycle. The market has 100 basis points of cuts priced in this year, which means that if we see 25 basis points next week, the Fed will have to cut 50 basis points either in November or the December meeting. Now, be aware, right now, the Fed is on what they call the quiet period. I think it's 10 days leading up to the meeting. The Fed governors and presidents and chairmen, they don't go out and make any public comments, which is good sometimes because my thought about a lot of these people at the Fed. We got a big problem with the Fed, in my opinion.
Such an idiot.
Yeah.
Such an idiot.
That's the thought about the Fed. So here's the issue. Half the Fed members are attorneys. Half the Fed members are economists. I don't think any of the Fed members have done anything in the way of assigning the front side of a paycheck. They're academics or they've worked in government. That's about it. So what's the issue there? What is our thought on that? Why do I bring that up? Well, they look at what's happened in the past. I just reported to you numbers of what's happening in the past. What I think the Fed is missing is saying, okay, what's going to happen in the future? What do these numbers mean? And how do I interpret them for the future? Economics. Boy, they drilled this into our heads when I was at Chapman College, now Chapman University. We study the past to understand the present in hopes of predicting the future. Okay, well, you got attorneys. They study the past and argue about it. Who's trying to predict the future? That's the issue right there. Whenever they say, it drives me nuts. They say, we're data dependent. Well, we don't have any data for October 2024. We have data for October 2023. Hard to figure that out. How are they projecting? What is their benefit there? Just throw that out to you. That's the Mortgage Minute brought to you by our friends at Geneva Financial. Again, when you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.